It seems lately that anytime Bob Iger makes an announcement, Disney's stock seems to drop. Now, if I was an investor, I would be irate at this point, seeing that Disney stock at one point was, closing in on that $200 share mark. And now we're hovering around $80 a share just a few years later. This article from Deadline kind of dovetails into that. Disney stock slips after media giant unveils plan to double spending on theme parks. $60 billion over the next 10 years. The stock, which recently reached a 9-year low just below $80, declined nearly 3% to $82.75 on the news. Just for the heck of it, let's take a look at Disney stock right now. Stock. Right now, it's sitting at 82.41. Let's look at the 5-year. See, if you look at the 5-year, it peaked on March of 2021 at 197.16. So again, if I was an investor in Disney, I would be just irate. I would be calling for board members' heads. I'd be calling for Bob Iger's head. And the reason being is you guys have lost me a bunch of money. The company laid out its vision in an SEC filing, slide presentation, and blog post. Yeah, that's going to help. The message was delivered by CEO Bob Iger and Disney Parks Experiences and Products Chairman Josh D'Amaro. They met with Wall Street analysts and investors at Walt Disney World Resort in Orlando for a parks-themed summit. The company believes its theme parks are humming along, but could evolve into an even more potent engine of profitability. Yeah, they're humming along all right. Their foot traffic is down to a level of 10 years ago. So if they consider that humming along, the strategic focus for Disney in recent weeks has been elsewhere, notably on legacy media assets such as linear TV networks and ESPN, in the financial vulnerabilities they bring. Yes, like declining ad revenue. The company has fielded interest in ABC, its 8 local TV stations, and other linear holdings from Nexstar Media Group, as well as from Byron Allen. DPEP has provided bright spots in recent quarterly reports, but has been less of a focus for investors than the years-long question about the best business model for streaming or how much the company will owe Comcast for its 1/3 stake in Hulu. That's $9 billion, folks. That's 9 with a B, billion. On the company's most recent earnings call with analysts, Iger was asked about the possibility of splitting the company in two in order to make the media side and park side more coherent and compelling to investors. Iger declined to speculate. The push into parks also comes in a politically sensitive moment, especially in Florida. There's just been little back and forth tit for tat between the state of Florida, Governor DeSantis, and Disney itself. Started with Bob Chapek, then now that Bob Chapek is gone, now Bob Iger. Has to do with the what some have mislabeled as the Don't Say Gay bill, even though none of that phrasing is anywhere in the bill, but I digress. In the blog post, the company said the investment-heavy strategy will center on story, scale, and fans. DPEP revenue is on pace to reach $32.3 billion in the current fiscal year, up from $23.5 billion in fiscal 2017. With operating income climbing to $9.2 billion from $6 billion over that same span. Of course, we do know about, shutting things down, along with the cruise ships, the resorts, the whole 9 yards for several months. In addition to highlighting that comeback and growth story, the blog post makes the case that there are many more horizons for the company to explore. In addition to development plans already underway, there's a significant room for further expansion on land and at sea. I have a question. What about that Galaxy's Edge boutique hotel that you guys had that you were shuttering? What are you going to do with that building? Just asking. Disney Parks has over 1,000 acres of land for possible future development to expand theme park space across 6 existing sites, the equivalent of about 7 new Disneyland parks. Disney Parks currently host about 100 million guests a year, according to the company. Citing internal research, the blog post said there's an addressable market of more than 700 million people with high Disney affinity. What's high Disney affinity? Who have yet to be reached with parks. In fact, for every one guest who visits a Disney park, there are more than 10 people with Disney affinity who do not visit the parks, it added. Okay. Where did they get that research from? How are you tracking Disney affinity? I might add. Again, just asking a question. Cruise ships represent another part of the growth initiative. As it is previously announced, Disney plans over the next 2 years to nearly double the worldwide capacity of its cruise line, adding 2 ships in fiscal 2025 and another in 2026. A new home port in Singapore will open in 2025, expanding DPEP's reach into Asia Pacific. So there you have it. Bob Iger opens his mouth. Stock drops. I'd like to hear what you guys have to say out there. Comment down below. Share your thoughts. Share your opinions. What do you think about Disney's plan for the theme parks over the next 10 years? While you're at it, please take time to smash that like button, subscribe to the channel, hit that notification bell to get notified when my content becomes available. And as always, thank you for watching, and I will see you later. We'll be right back.